Okay, this is our update on uranium here going into the FOMC announcement. It is July 26th. It is night. It's the evening, so we have a full complete candle. We'll walk through CCJ. And for my last update, remember, so daily cycle count right now, we have a swing high on day 13. That is active below the low of that day, which was 23.48. So we're right now at 23.12. So about what, 30 some odd cents below that level. And actually, you can see from this candle today, so Tuesday, we actually tested that level and then pulled back hard, which, this whole structure here is a bit of a bull flag. So today is day, 14, 15, 16. So today was day 17. Tomorrow will be day 18, which is Fed day. So maybe we continue higher, we print a daily cycle high, and then we come down. So either way, you would imagine a daily cycle low sort of decline is coming soon. And more importantly, on the weekly chart, this is just week 11. What I will say is this is all 1, 2, 3, 4, 5. There's been 6 weeks of consolidation after this huge down candle below this swing high from week 4. I just talked about the swing high on the daily. I marked it. Hopefully you're seeing this is the same exact concept, except this is on the weekly, so it's actually even more significant. So it's week 11 of the weekly cycle. This definitely could play out to be a failed bear flag, which means we get a furious rally out of it. But right now, based on where we are in the cycle, based on all the other context, this to me is looking like, we want to do something like this. Like imagine, right? Like this is your bear flag, right? Maybe we even go something like that before we do that. And then 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 we do and I'm not being specific with these numbers. I'm not saying I'm not saying we're going exactly to 14. Just the principle of the thing, right? We can build out this bear flag and then dump to a new low. Another bear flag, dump to a new low. I'm not saying that's definitely going to happen. But you would think there's at least going to be a dump off of this one. It's so early in the week. I mean, it's not so early in the weekly cycle, I should say. 11 weeks is not early, but it's not super late either. But ultimately, it's going to be whatever the direction the market goes, right? If the market does not react positively to the FOMC news, this is going to dump. And I would expect that's what's going to happen, but we're going to have to watch. Structurally, this is the making of a failed breakdown, though, right? So you had this candle here, had a high. This is a weekly chart again, remember. So last week our high was 24.07. And this week we actually opened below the low of last week. So we were looking to make new lows on the weekly, but now we're rallying back. So this is that pattern I always talk about. This is a bullish outside candle, which is also a fake breakdown, right? You can say we broke down below this low. Now we're rallying back. So that puts us that puts a move to 24 in play to fill that to complete that pattern. So we made a new low and now we would make a new high. So that's really interesting to look at. I'll be looking at that very closely. Again, all be triggered by the FOMC meeting. But as I say, not to sound like a broken record, you have to be aware that we rallied for 25 months coming out of the big low from COVID. And so you have to ask yourself, is it possible that was the top of the 3-year cycle? 3-year cycle, easy math, that's 36 months. So if we topped out on month 35 and it's a 3 years and it's a 36-month cycle, that means we would have a 9-month decline, right? This is month 28, right? So that month 25, just to be clear, was April. So then we declined in May, we declined in June. We have a nice little green July, which is about to close in a few days. And now we see what August brings us, right? Does it give us a swing low? We come up here, and then that's where that's where things get really interesting, right? How do we get outside of the range of this candle, right? We need to get all the way to 28 to get outside of the range of this candle, which is going to be a tall order, which is why you could absolutely see something like we even come all the way up here before we start to kind of ratchet down into our 3-year cycle low, right? Which would be due somewhere around March 2023. So that's the word on uranium.